Hi, my name is Laura Dawn Lewis, and I'm the author of Laid Off Now What. In today's segment, we're going to cover the 5 biggest mistakes monetarily that unemployed people make that cost them money, or actually may not deliver the money that they need. So let's get right to work. The first one is if you happen to have a healthcare spending account when you were employed, that's something that you contribute to every single week. And they take it out of your paycheck and then it goes so that you can pay for medical expenses. Generally, what happens is you get a credit card around the end of January that you can then use throughout the entire year to pay those medical expenses. Um, this is how that works. Let's say that for some reason in March you got laid off from your job. Well, you had opted to have $4,000 taken out of your paycheck over the course of the year to be able to pay for medical expenses. So at the end of January, when you actually get that card, that $4,000 is on there. Now, here's the beauty of it. And do check with your own plan and also with your own state. But so far, from what I've been able to tell and from what I've been able to find out, is you don't have to pay that money back even if you didn't contribute all of it onto the card. Now, of course, they may find a way to close this loophole, but as of this writing, that was the case. So, how does that work? So, you lose your job in March. You've contributed about $900 towards the total of the $4,000 at that particular point, but you've got that full $4,000 on that credit card that you can now use. Where can you use it? Well, you can get everything from dental work done to LASIK surgery to using it with weight loss programs like Lindora. You can use it to buy sunglasses, anything that would come up as being a medical expense. So you may have as much as an extra $3,000 to $4,000 that you didn't even know you had. So check to see if you had a healthcare spending account. Also, the same thing may apply with the child care spending accounts, which also come out of your paycheck and are set aside to be able to pay those expenses throughout the year. So that's number one. The second thing that people make the mistake of doing once they get unemployed that actually ends up saving them money is they forget to look at their car insurance. Now, I'm not talking about having to go get a new car insurance company. You don't need that. But what you do want to do is you want to drop your rates down to what are called leisure rates. Leisure rates mean that you only use that car for basically going back and forth to the store for leisure purposes. It's not used to commute. It's not used to go to school. It's not used for anything other than, basically running around a little bit. That will save you, depending on what your insurance is and where you live, anywhere from hundreds to thousands of dollars per year. You also might want to ask your insurance agent about possibly removing any teenage children from your insurance policy. Yeah, it's great when mom and dad pay the insurance, but mom and dad, if you just lost your job, maybe it's time that Junior figured out a way to pay for it because it's going to be an expense that you really don't need right now. If you're in a two-person household where there's a husband and wife and one of you is still working and the other one is not, then get the leisure rates on the car that the spouse that's at home uses. This will still be able to save you some money. Okay, the next big mistake that people make when they become unemployed is they forget to cancel all of their automatic payments. When you've got money coming in and you know where it's coming from, it's no problem. I mean, you know the money's going to be there, it's going to be able to pay the bills. But when you're unemployed, everything becomes tight and it becomes very, very difficult. Automatic payments can really send you into an absolute tizzy if one comes through at the wrong time and it happens to hit your account 2 minutes before midnight when a bill comes through, when an actual payment comes through 2 minutes after midnight. It can end up bouncing everything and those NFS fees will kill you. So cancel the automatic payments. You're not, this way you have control over when you actually pay those bills, and in retrospect, frankly, most of the time the late fees are less than the NFS fees would be anyway. So if you need to be a couple of days late on a bill, you can. In most cases, it's not going to affect your credit unless you're 30 days or more past due. Credit card companies are another deal, but do what you have to with them. The next mistake that people make when they file for unemployment is if they get laid off in the months of May and June. Now, the fiscal year for most states is July through June. What this means is that if there's going to be a raise in the amount that's paid per week, it's going to happen in July, but it's only going to take effect for those particular claims that are filed after July 1st. So, if you lose your job in May or June, call your state's unemployment office and find out if there is going to be a raise in the unemployment for the fiscal year. If there is, find out how much it's going to be, because it may actually behoove you to wait and file until after July 1st. Just to give you an example, in 2002, this was an issue in California, and it meant $400 more a month if you waited until after July 1st. So check it before you file, just to make sure you're not going to ace yourself out of money that you really do need. Finally, the last mistake, and this is one that when you speak to accountants, they will go nuts about. The most common mistake that people make when they are unemployed is if for some reason they have to cash out their 401k, cash out CDs, cash out stocks, cash out, sell a large item such as a car or a truck in order to make ends meet, is they forget about capital gains. If you're going to cash out your 401k or a portion of it, contact your accountant first and find out exactly how much you are going to be responsible for in taxes and have that set aside. You need to do this, because the last thing in the world that you're going to want is going to be a surprise come April 15th next year. So in summary, let's look at those. You want to see if you have a healthcare spending account, and if so, how much is still left on your card that you can use. Chances are you do not have to pay that back, and so if you don't use it, you lose it. Secondly, drop your car insurance rates down to leisure rates if at all possible. This could save you hundreds, if not thousands of dollars per year. 3, cancel all your automatic debit payments. You need to have control of your cash flow, and this is going to make it the easiest way possible. Don't you just love dogs? Those are the neighbor's dogs. Sorry about that. Number 4, if you're filing for unemployment in June or late May, check with your state first to find out if the rates are going to be increased. And finally, if you are cashing out a 401k or any large asset, find out what the capital gains taxes are going to be before you do that, and make sure that you plan for those, because they will come back to haunt you come April 15th next year. My name is Laura Dawn Lewis. I'm the author of Laid Off Now What. I hope this segment has been helpful. You can get a copy of my book on the website at Laid Off Now What as either a digital download or a paperback, and I look forward to seeing you again. Thanks a lot. Have a great day, and go get 'em, Tiger.